Hi guys, welcome back to the channel. Today I'm going to break down one of the quickest trades I have taken this week. It's a clean buy setup on EURUSD using the turtle soup entry. I'm sorry about the lighting of my camera. There's no electricity right now, so let's get straight into it. Basically, this one it played out very fast, and I just want to show you exactly why I saw how I entered and where I got out of the trade, right? So first off, looking at the bigger picture, we knew that price was moving higher to to this highs. So I was expecting price to move to those highs, right? On the daily time frame, we know we are bullish because we closed above yesterday's high, previous day's high, and then we have a week below, which suggested price wants to move higher, right? So that was my indication. That was my bias for today, was to look for buys throughout. That was what I was looking at on the daily time frame. Now on the 4 hours time frame, that was where magic happens. I have my range as usual. So this was my range, and you know, if you can just look at this clearly, during the London session, as you can see, the price moved lower. It went down, and I was expecting price to give us a retrace, maybe a CISD from this fair value gap, because we were in the premium of the range, and I was expecting price to maybe give an entry and then move higher before sort of a retracement, like I said earlier. Like I said yesterday, I was expecting something like this, taps into this fair value gap, then gives a CISD, taps the CISD, gives us a retracement to the upside, and then moves lower to the premium of this range. So that was what I was looking for this morning, going to this morning. But unfortunately, we could not get that because let me show you what I mean. So if you look at this morning, we have, this is the fair value gap that we highlighted on the 4 hours, and this is the low that we highlighted, right? So coming into London session, we took the low by 245, and then we got the CISD here. I was very skeptical about this trade because I was not just comfortable with the whole setup. The fair value gap was very small, and it's barely even showing any fair value gaps on the 15 minutes, not even talk of the 1 hour. So I didn't like, I was not really buying the whole buy idea at this point in time. So what I did, I risked very little on my account. I risked 0.25% for this trade, just to I don't want a situation whereby I will miss a trade because I was feeling my gut, so I reduced my risks. And those are the things that you do in order to preserve your capital, because when you don't trust a trade, is either you leave the trade or you reduce your size, and it just helps you, more, to be more, more accountable to yourself. Because to me, I would have hated myself if I didn't take the trade, and the trade played out well, and I would have also hated myself if I had used my normal position sizing and I got stopped out of the trade, right? So I used 0.25% and we got stopped out of this trade, right? So I was like, okay, since we got stopped out of the trade, that means we want to complete the CLT. Mind you, we also have CLT. We also have a CLT on the 4 hours. As you can see, this is a CLT, right? Why is it a CLT? Number one, is a bulky candle. Number two, I'm talking about this CLT right here. Number one is a bulky candle. Number two, we have candles closing inside of the CLT, right? But then now you will say, okay, Taib, why are you using this candle? Why are you using this candle here instead of just using the whole range? Now I'm using that candle because most of the time, whenever price you are trading in the same direction with price, the opposing CLT doesn't get filled, doesn't get completed, right? Like this is bearish CLT, obviously. So most of the time, CLTs like this don't get completed. An example of this is this CLT here, right? We had this. It didn't even sweep the high, so we cannot even call this CLT. Let me try and look for an example for you guys. Okay, yeah, look at this. This is a bearish CLT because price closed inside of the range. But what did price do instead? Price went to what? To the, I think, 25%. Price went to the 25% of this range and then moved higher from there. So this is to show that price doesn't respect opposing draw on liquidity. The opposing the sell setups in this case, it doesn't respect it. So my thought process during the New York session was that since we have a daily range, right, and the CLT, once the CLT completes, we know that we are going into the discount of the range, into the OTE level of the range, right? And then we have all these breaker blocks right here, and we also have this other block, right? So I was looking, okay, if price wants to move lower, I should at least move to these OTE levels, right? Notice how I am using my daily ranges, my OTE levels, and my CLT. You see the way I'm aligning them together, right? Now, during the London session, right? New York session rather. Let's mark out I saw that 5 p.m. came to tap into this 4 hours order block. He tapped the 4 hours order block, right? And then we closed just by tapping it, right? Now, seeing this, I was like, okay, since we closed just below the other block, right? 9 a.m. we obviously want to, manipulate this low and then move higher, right? And if you look at this 4 hours order block, well, you would notice that we have a 15-minute order block here. It aligns with it. So we don't need this 4 hours order block again. As you can see, we have this 15 minutes order block. That is the beauty of aligning OTE levels with key levels with your CLT. As you can see, this is the CLT low. Sorry. this is the CLT low, as you can see. The CLT, the 1 p.m. CLT low, right? And then price came to purge the CLT low into the 0.62%, right? And then we have a 15-minute order block nested in between this place. So this is a valid, so this was the main reason why I took this trade, right? So now how did I take this trade? Basically, when I saw price forming this low, I saw price forming this low, and then I was like, okay, price will not come and move lower. So I took this as my low because it's obviously the low, right? And then I used a 10 pip stop loss just right below this other block here, right? And then I targeted 3R, the way I always target my 3R. That's the way I trade using the TradeThis super entries, right? And then just this one candle went and pushed price and then hit our TP, and that was what, and I was out of trade. Less than 15 minutes. I didn't even take up to 5 minutes for this trade to play out, right? So this trade is a good example of how I apply the daily ranges, CLTs on the 4 hours time frame, and drawn liquidity, right? Simple execution. And if you're trying to get consistent with your entries, I recommend you studying CLTs, daily ranges, drawn liquidity, higher time frame, lower time frame, intermediary time frame. Those are what helped me during my long break before coming back on YouTube. So if you found this helpful, don't forget to like, subscribe, and comment. And I'll be back with a full recap soon. Peace.